Hello and welcome to Ticker Tapes. It's Friday, which means that we are looking at the world of meme stocks. As has often been the case recently, Bed Bath & Beyond is our lead item. However, the story of this investing enigma has taken a tragic turn, with the death of the company's CFO, Gustavo Arnal, who fell from the upper stories of a building in New York's Tribeca district known as the Jenga Tower. The New York City Medical Examiner's Office ruled Mr. Arnal's death to be a suicide, which came just days after the homeware retailer announced a restructure that included 150 store closures and numerous redundancies. Mr. Arnal was also the subject of a lawsuit that alleged that he and the company were part of a pump and dump scheme that inflated the Bed Bath & Beyond share price, after which Mr. Arnal sold stock in the company. A Bed Bath & Beyond spokesperson said that it was in the early stages of evaluating the complaint, but based on current knowledge, the company believes the claims are without merit. Before joining the retailer in 2020, Mr. Arnal had spent 20 years at Procter & Gamble. Bed Bath & Beyond traded down by 16% on the news as U.S. markets reopened after the Labor Day weekend. Hedge fund manager Jim Chanos has waded into the debate about AMC Entertainment's recent issue of preference shares. The renowned short seller, who is president and the founder of Kinnikos Associates, believes that the new preference shares should trade in line with the ordinary stock of the movie theater operator, and he has taken a position to back up his claim, buying Ape, the preference shares, and selling AMC, the ordinary stock. Mr. Chanos feels that the 30% discount between the stocks is unwarranted, and he is betting that this gap will narrow substantially over time. IBIO had been the subject of bearish options trading during August and repeatedly appeared in lists of unusual or outsized option trades. Ahead of the holiday weekend, the company reported that it had granted stock-based incentives to two recent recruits. The two new staffers were granted stock options at the strike price of $9.69, and they can feel very happy about having signed on the dotted line thanks to an announcement that the company's Phase 3 trial of its treatment for progressive macular degeneration had met its primary endpoint. News that sent the stock up to $15.13, or 60% higher than the prior close of $9.44. What's more, volumes traded went through the roof, and by mid-morning Tuesday, more than 64 million shares had changed hands, compared to daily average volumes of around 4 million shares. You could almost hear the short sellers scrambling to cover. OTKA Inc., a provider of identification and authentication software for developers and enterprise-scale networks, was one of the worst-performing stocks on NASDAQ over the last 5 days, falling by 41%. The software sector is a popular meme and has been picked by several leading banks as one that would outperform even as interest rate rises and a potential recession limited earnings in other sectors. The optimism wasn't reflected in Okta's earnings last week, however, and though the company beat estimates for Q2, it guided significantly lower for Q3 and the full year, prompting a series of downgrades and a painful derating of the stock.